Good evening, ladies and gentlemen. So tonight's video is going to be focusing on why it's just too quiet across the board. Something's brewing. Now, I'm not here to hype you up. I'm not here to put any FUD across to you. But from a trader's perspective, when he sees that the Fed is saying that they are trying to get their actual objective of 2% when it comes to the rate of inflation, and then the charts themselves ain't showing no stance, then something is brewing. I guess the leading indicator for the true understanding of where traders' heads are at is Friday. Friday is when we're going to be seeing the employment change for the Canadian dollar and the unemployment rate, average hourly earnings, non-farm employment, and the unemployment rate. Now, the problem with today's news announcements, ladies and gentlemen, is there is still 11.25 million jobs available for the people in the US. Yet unemployment rate is still around the 5.92 million. What's going on there? In an article released last week saying that if the job openings did come out around about the same figure as what they had projected it to be, the Fed's going to have a hard time trying to resolve the situation without creating an employment recession. Not so long ago in the channel, ladies and gentlemen, we actually had a conversation about the good old word stagflation. And that was based on the actual results from the ISM. Well, let's just go back to that video where we had the conversation about Bitcoin and stagflation and what you need to know. Now, this was back on June the 9th. Go and check that video out. But stagflation in a nutshell is when economic growth slows down, inflation increases, unemployment increases, you have stagflation. Yield curve is inverted, ladies and gentlemen, where the long-term yields are actually dropping, so they don't believe that things are looking good and they want safety. But it's a bit bizarre, isn't it? When you actually look at the chart for various assets to understand exactly where we are, we look at the dollar index itself, and in today's live, you could see that, bang, they took out that 107 mark. Strength in the dollar. Dollar dominance is here to stay. Euro USD trading close towards parity, ladies and gentlemen. Unbelievable. Word on the street says that we are likely to be trading below parity. What would it look like then? At some point, ladies and gentlemen, the dollar is going to have to drop because it doesn't pay the dollar in terms of trade to be so valuable. An appreciation of 7% on the US dollar, that is nuts for trade. This is all because they want to price in the idea of recession. Let's have a look at oil. Oil has taken a nice little nosedive, ladies and gentlemen. We got this big red vector candle in this range. And we know what they're like when it comes to vector candles. They like to come back into the recovery of those zones. Happy days. Look at that nice little bad boy right there. Fully recovered. Go down into the precision of Mr. Market Maker. Look how despicable that is, ladies and gentlemen. Look to the left and you see the green vector candle right there where it opened. And then look to the right, ladies and gentlemen. You can see where the candle wick of that red vector candle finalized before it moved back up. And they say that we are in an efficient market. Don't even chat wet to me, ladies and gentlemen. The game is designed for you guys to put your money in because you believe it's going to go up or down, and then they test you to see how long it's going to be until you get your liquidation point hit or your stop loss taken, and then it repeats itself over and over again. This is the nature. This is the hardest, easiest way to make money, ladies and gentlemen. Whether it goes up or down, one man's fun is another's hell, and that's the truth of trading. Looking at the NASDAQ and the S&P across the board today, ladies and gentlemen, we do have the situation that with regards to the Purchasing Managers Index itself, we have the understanding that even though it came in positive, the problem that we're going to have is this, and this comes from Morgan Stanley. They said that any movement up in the markets going into the second quarter of this year is only going to be because of earnings announcements with companies. It ain't going to be to do with macros. Now, that's important to understand. Because if the macros of the markets themselves, where is the big money flow coming from? They're increasing interest rates. Now they're talking about 50 basis points, not so much 75. What's the Fed actually doing? How are you going to get inflation to the actual objective of 2% if you're going to start to be a little bit lenient on the actual base points that you're looking to increase? Something's going off right here. They've even said it. Yellen said that they were wrong about inflation. Are they wrong if they're going to do it at a lower interest rate? Just so that they can control the market and not let people believe that recession is happening. Ladies and gentlemen, we've already got the problem that Russia's cutting that main gas pipeline. So has oil been prepared for a move back up in anticipation? Until the words recession is now here, you're going to start seeing assets that would be the go-to for traders when it comes to recession start to pull back. Let's make the assumption that oil is preparing a move back up, because oil came back into that previous consolidation zone that we were talking about with the recovery of the red vector candle in that zone. Nice big M formation happening on oil right here. Now oil is in a situation where it's likely to start reversing back up if the narrative says that if we are going into a recession, traders will naturally seek commodities during those times. A billionaire oil baron said it, if you're going to want to control inflation, you need to flood the market with oil so that there is a mad supply, so that then the actual price of oil then drops because the supply itself is outweighing the demand. That's how you control inflation, according to an oil baron. But that ain't going to happen, ladies and gentlemen. That's not going to happen. Because there's something more happening behind the scenes. We are due for a reset. Has the reset happened in relation to the S&P? Are equities across the board now coming to grips with the idea that, yeah, we're in a recession, and have they priced it in? Things are far worse than they are right now than they were back in 2008. And that's what the analysts are saying. Things are worse than 2008. Things are going to get worse. Well, there's no one filing for bankruptcy. Lehman Brothers filed for bankruptcy. There's no Senate bill being passed to do a rescue plan of $700 billion. That's what happened in 2008. There was no global financial crisis happening. Right now, it's all to do with trade and political tensions across the board. Remember yesterday's video, ladies and gentlemen. Inflation and recession, human nature never changes. So guys, going into tonight's price action with Bitcoin itself, we need to understand, are we going to see Bitcoin look to recover this red vector candle within this month? Are they finished with this zone? Or are they going to get ready to start working down towards the weekly vector candles before they actually start to move price back up? Is Bitcoin finished from this point, or is it about to start a nice little return back up? Well, ladies and gentlemen, going closer into the smaller time frames, we're going to understand and make sense of that very shortly. Remember what we said today in the live stream. The New York session itself is designed to trap traders, and they did a great job of doing that today. Stop hunt rise, drop, continuation out. Now we've got this previous wick right here, which will need to be realized by Bitcoin for us to understand if Mr. Market Maker is preparing a run to the downside, or if he's going to just creep price up back in towards this zone. Because if Bitcoin can break above the 20,900 zone, then Bitcoin then has room to come back up in towards this red vector candle zone right here, ladies and gentlemen. But how many of you, and let me know in the comments, how many of you are comfortable with a purchase right now? How many of you are comfortable buying? Given that the whole system itself is screaming that there is a problem and we are due for a mad drop across the board. How reluctant are you to trade? You see, during these times, you are designed by nature to not do anything and sit in cash. Cash is not king when everything is at a discount. Okay? You don't wait for price to rise before you buy it. You wait for it to pull back. Now it's that pullback. How long does it last for? Now, just before we start getting into the hype of Bitcoin mooning out, as the good old moon boys would start to say, we need to look at where Bitcoin is on the daily. What has Bitcoin done on the daily? Absolutely nothing. Although the structure seems like it's on its way to completing, we need a bit more commitment from Mr. Market Maker to lift the ask so that we can understand exactly where we stand with Bitcoin. Still a bit of liquidity down here that they need to come back into. This commitment by moving price up here with no clear follow through is a little bit of a cause for concern. Consecutive lower highs are happening in the charts where Mr. Market Maker is spiking up, pulling back, spiking up, pulling back. Before you break down price, technically. You need to understand psychologically what's going on when a zone is rejected each time. There's liquidity up here. Go up to it, snap, bring it back. More liquidity up here, snap, bring it back. And this is what the hybrid system is, ladies and gentlemen. The hybrid system tells you about the meta game, for the better word, in relation to why price is likely to move up or down. You know that there is a system working behind this thing. It's not an efficient market. It's run by a group of market makers. Asia, UK, US. That operate all hours of the day. Anytime. 24/7, especially in crypto. Monday to Friday for Forex. And Sunday night at 10 p.m. That's when they start the game all over again. Will Bitcoin tonight do the same thing as they did last night? If the consensus says that they're going to absorb what has happened today and roll it into Bitcoin tonight, because Bitcoin does have that habit of doing that, it does have this tendency to react when all the markets are quiet, when volatility is high and liquidity is low. So be mindful of it. So, stagflation. Now that it's being used across the board in relation to news articles, the fear is getting installed in people. FOMC seeing lower growth forecasts for the second half. Are they going to do the right thing with inflation? Will it be 50 basis points, 75 basis points? This is the same thing over and over again. Look, will July be 50 or 75? So for you as a trader, when it comes to understanding the basis of what stagflation is, you're looking for areas where economic growth is starting to slow down. So you know you're going to be looking to run shorts on certain assets. If the idea of inflation is still present, you're going to want to seek commodities. So you're going to be paying attention to oil. If unemployment is going to be the same thing over and over again, you're going to want to head over to any broad or major asset class that's going to reflect the impact of unemployment. Because if people are unemployed, that means people ain't spending. And if people ain't spending, that's going to put pressure on those who are going to have to make payments back to any creditors that they have obtained, whether it's for mortgages, whether it's for businesses. As a trader, you can look to exploit this sort of thing when you run shorts or when you sell certain stock. Now, if you don't know what selling is or what shorting is, the be-all and end-all of shorting is this. You are favoring price action to drop. So you sell the asset. What you're really doing is you're borrowing the asset when it comes to the eyes of the exchange. You're borrowing it and then you're giving it back at a lower price later on, which the transaction would be a buy to cover. That's the basis of short selling. You are favoring lower prices. Ladies and gentlemen, mad love and respect for passing through to tonight's live. If you've managed to survive this battering of your earlobes, I thank you once again. Be sure to subscribe so you don't miss out on the live stream that we will be doing tomorrow, 2 p.m. UK time, GMT. We're always about the fire, ladies and gentlemen. Mad love and respect. Peace.